Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check? And then how are we doing in YouTube this morning? Okay, do we have any audio in YouTube? All right, thanks, Ryan. Well, good morning, everybody. Welcome to the Traders Lab and welcome to 2025. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The stream's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars on how to integrate a high-tier order flow tool with market mechanics using structured trades. And you might consider this a opportunity to learn what the business of trading is. And while everybody, is different and how we perceive the market, of course, will be unique to us as how we interpret it, it's very important to understand the business you're in. And I've found in my career that I never really understood what the business was. And of course, when I started in 1980, I don't think many of us understood what it was because technical analysis was really in its infancy. So at least for me, my learning curve was rather steep and arduous. There was just no information. The opposite side of that is now, if you open up a software package, they may have 200 indicators in there. And I remember when I was starting out, we didn't have 200. In fact, we didn't have any. And it was all fundamental analysis. We didn't have technical analysis. Technical analysis was classical bar charting. So, things have really changed, right? Well, what's happened really is developing traders or coming into this business think it's an indicator-based business. And my question to you is, why do we have all those indicators? I think if we just had a couple good ones that actually worked, we wouldn't all or whomever would be looking for the next best indicator. That might be the answer right there for you. Maybe indicators are part of the problem, and traders' understanding of the business might be part of the problem. So the idea of the Trader Labs is to help traders understand the business of trading, how it works, why the market does what it does, how you might get in alignment at times with it, and also to understand that this is a gaming process or gaming theory operating the same way as casinos operate. And the reason we talk about that, or at least I talk about it, is that if you understand the business model, maybe then you can develop a process that actually aligns with a successful business model. And also, it's not about predicting and being right and all the things psychologically that we need. It's quite different. So for 2025, the Trader Lab is going to focus on continuing to help you differentiate your outcomes from what happens to most other retail traders in this space. There's good reasons for it. You might find that finding out what those reasons are might be appropriate for you to help you get in better alignment with the actual business model. It doesn't mean you'll ever be successful. It takes tenacity, and you're going to go through a learning curve that is potentially not pleasant because it'll be frustrating. And I can tell you why it's going to be frustrating. It's going to be frustrating because our nature is the need to be right, to try to predict and curve fit and create certainty. We're in an environment where it doesn't exist, but our wiring needs that. So that's why we gravitate towards indicators and structures to create this confidence and certainty. Well, if you understand you're not in the business of certainty, then maybe you've got to learn to operate in complete uncertainty at 100% of the time. And that's not typically what we do because we don't want that, and it's not natural to us. So 2025 is going to be about helping retail traders redefine the business they're in and then to potentially develop a business plan to operate in that environment. And I hope you find that interesting, useful, and rewarding. And you're all invited to the Bookmap Discord Trader Lab community. There is no cost. There is a link in the bottom of YouTube if you're inclined. So, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. However, you can use the link in the bottom of YouTube if you're visiting and access 60 PDFs of these structured trades that you can reverse engineer. Plus, there's a library of webinars that I've done in the Bookmap Discord Trader Lab community that kind of gets you some orientation on what's going on and what you see every day here in the stream. And remember, Trader Lab is not a trade calling room. It's really a virtual trade desk with a group of traders who come together to leverage their collective experience. It's not about what I do. It's really what you are going to do, when you'll do it, how you do it, and why you do it. You can't answer those questions and you're just playing a video game. And I'm going to suggest you might want to go, if you're going to play a game, go to a arcade. By the way, this is what the structured trades look like. You can use the link in the bottom of YouTube if you want to visit Trader Lab, and there's 60 of these. And these are the basis of what you're going to see here. Explanations, actual trades. Now, when I put these together, these are actual trades I took, and some of this is research oriented. I was working with Bookmap developers on things to help retail traders. Doesn't matter. Some of these ideas are okay. Some of them have been incorporated into current processes, and others got thrown out the window from the 50th floor. You know how that goes. That's research. Now, last thing to mention, today's the last day to save 30% on the Global Plus annual subscription. The Global Plus is all the bells and whistles, and it's really, you can execute off it. It has a lot of things. It's got everything in there but the kitchen sink. Go to bookmap.com if you want to take advantage of this. If you've been thinking about subscribing to Bookmap, 30% off an annual subscription is, well, never saw it before. Who knows, right? If we'll ever see it again. So check it out at least. And also you can look at what the add-on bundles are. There are some advanced add-ons you can put on with that, or you can start with the Global Plus. Either way, saving dollars is good. Don't miss out on that if you've been thinking about it. Sometimes you got to act, and I can tell you I've been using Bookmap since 2015. For me, it's been a very positive addition to the arsenal. I wouldn't trade without it. But again, you have to vet all these things for yourself. And like any high-tier tool, you've got to learn how to apply it. Now, I've got to bring you back to where we were. I'm a little behind today on some things because I was rather active this morning. And I do post in the Trader Lab in, as much to real time as possible. And I don't call trades. I found that, and if you're in trade calling rooms, you're really wasting your time. Isn't the idea to learn how to trade, right? So let me see if I got the right date here. And that doesn't mean, by the way, that trading is for everybody. Obviously, it's not. I got to make sure I got the right levels here. I am a little, let me just make sure I got the right. Now, we had a holiday yesterday, so I do not include that in this. 12:31. Okay. So this day was pretty important. And if you guys remember from the stream, and that stream is posted, and I made it public, it was the levels. Now, I'm talking about this day here. So the levels were 80 and 60. So for me in the morning, it was longs up to 80, and then through or not and take out this high, or once we got under 60, and this is all in the stream, and you can access this, it was take out this low. It's one or the other, high or low. Okay. So, and that got shorts in the market. Now, this morning, let's come back to our levels, 80 and 60. Still primary levels in here. And the potential to take out yesterday's high, same as this one. Yesterday's high. So this is the day before New Year's Day where the market was closed. So take out yesterday's high or take out yesterday's low. But what do we do here? We took out this low day before yesterday. It confuses me when we have a day off. So if we got shorts in the market, think of it this way. Market goes up to go down. Market goes down. Now we don't know to where, part of the joy, to go up. Market goes up to go down. Market can go down to go up. Okay? So the market rotates on top of itself. So if you're a day trader, part of the joy of all this, besides not knowing what's going to happen, is to understand what might happen. And so I'm going to continue along. Anyway, in fact, I'm going to skip the higher time frame here. I've lost too much time. So I'm going to go into the actual structured trades. And I hope you guys, please accept my apologies. I'm streaming from Costa Rica, and they do have, where I am located, a very unstable infrastructure. So things happen. So I'll do my best. Okay, so let's take a look at these levels here. I'm going to try to get back here. Okay, we have yesterday's high, which has a high probability getting taken out. 80 was the key level. Above us, we have the ETH high. And we also have, let me just see what else here. The ETH, or overnight volume point of control. These are high probability targets. Let me try this again. Yeah, I am not, guys, if you're watching me in YouTube, I am not able to access the YouTube chat. Please use the link in the bottom of YouTube if you'd like to come to the Bookmap Discord Trader Lab community. There's no cost. While you're there, you can also download the 60 PDFs of structured trades and access the library of webinars. And, of course, the Trader Lab community. So, RTH open. Now, there's always a couple possibilities in the market. Market, of course, goes up or down. We know that. But if you have a structured trade plan, then there's a couple things you could be looking at. First of all, the market is short. So if the market is short, then the possibility exists that we're going to get sellers first. In other words, get more shorts and then squeeze out the shorts, or get longs and just squeeze the shorts out, or get longs and then more shorts come in, and then we get the more shorts and then we squeeze them out. So the market's often what it's going to do is it's going to rotate around itself. So what we try to do is get an alignment as best we can with the market. 1 second here. I'm still having some technical issues here. See if we can get everything working here. That's my investor RT. That would be nice. Okay, that's working. Okay, so let's look at the first trade here. Now, this is called VPOC migration. This is the overnight volume point of control. What it represents is the retail price or fair price in the ETH. And the auction, if you want to think about how does the market work, it's not indicator based. It's really based on participant behavior. So let's start with what the market truly is. It's not your indicators. Your indicators, not the market. The market is what's right in front of you. And it is in the outcome of any interaction between the buyers and the sellers is who's dominant where. So, but what we know in the auction is high volume represents, like when you go shopping, a fair price. And the idea of the auction is to determine what's too high, what's too low, and what's a fair price. Kind of seems logical, doesn't it? Well, if this price from the ETH, which is called a volume point of control, that's a terminology from market profile days, back in the Stone Age when it first became available from Peter Stoudemire over at CBOT. This is the retail price. So if it becomes too high, we can leave it. The other possibility is if we leave it, we can come back and be sure. Is this really too high? So let's look at the first trade. For me, the first trade is a long. Now, it was interesting because the fact it's a long for me doesn't mean it's a long for somebody else. The beauty of trading is this can be a short for somebody while it might be a long for me. So, which is a good reason that I don't call trades, because my long is somebody else's short and their short might be my long, or my trade plan allows me to trade both sides. But you don't have to trade both sides. You just trade the side that works for you. Does that make sense? So let's look at the first trades here. Now remember, 60 and 80. Remember, 60 and 80. 60 and 80. 60 and 80. So what am I thinking? Well, good question. I'm not so sure myself. What I'm thinking is 80 is a potential target, yesterday's high. I'm thinking overnight volume point and control, the retail price from the last auction, ETH, and in a higher time frame, 60, a retail price in an intermediate time frame. So I have these levels. Now, what I'm looking at is where, if anywhere, might I be looking for either a long or a short? Well, this is the ETH volume point of control. It has a high probability of getting checked. This is an area of support. So what I'm thinking to myself, and I'm just telling you it's just what I'm thinking, doesn't mean it's going to be right because it's just a trade. There is no right or wrong. It's just maybe. Right here, I get my RTH open, 8:30 Central Time here in Costa Rica. By the way, remember, if the stream goes down, I'll attempt to get back. It could take a couple of minutes, so please be patient. Also, if it goes down, there is a link in the bottom of YouTube. You can always come to Bookmap Discord Trader Lab community. It's a great community. Take advantage of the community, the resources, and we go from there. So, too high, price goes down. This is the high volume. Think of it like the auction is really, here's the sellers, here's the buyers. This is a sweep. When I see a sweep, I'm anticipating a sell sweep, a reversal. So I'm looking for a reversal. What do I get? No reversal. Now, liquidity is resting in the book. This is called a heat map. And right here, we interact with this liquidity. I see absorption. This is delta. They're being absorbed. What happens here? We break below it. What happens over here? We test it. Is this too high? Well, we break away from it. What is my volume point of control doing? It's moving lower. It's saying the retail price, these are too high. Okay. I break back. I test here. So right here, I have a choice. I can take a short to here, or I can be thinking, well, maybe I want to get long because I have a high probability of going there. Which would your trade be? Good question, isn't it? This is where trade plan comes in. Let's see. And I had a data hold there. That's always enjoyable. So what this does right here, this sets up a potential long rotation. Let's just see what it does. Now, if it holds this area, I'm looking for it to come back there. So let's just see what it does. Now, this suggests right here a rotation down. And this guy here, this liquidity, is gone. So let's watch it. This set up a long for me. Now, what I did here, and I posted this in the Trader Lab. Now, there's other traders going short. I'm going long. And there's not a right or wrong to this. Why am I doing this? Because this is an important level. Remember, 60 and 80, which I did at the top of this stream before I got interrupted. I think a monkey was swinging on a chandelier out here. And then sets this up. So location, think real estate, to here, and then potentially out the top. So let's look at it. So this is a long for me here, because I can't get the bottom of anything. It's not in my toolbox. But this is the trigger. So I see this, I come back here, I see the buy sweep, which sets up the counter rotation. If I don't take this out, and remember, I'm not doing this in the middle of nowhere, I'm doing it right at a level. That's why this is pre-marked on my chart. I know where my levels are. I don't know what'll happen. I haven't figured that part out. Hold on a second. Yeah, I'm not able to get to YouTube. Am I still in YouTube, guys? Am I live in YouTube? Can you let me know? So this is my first long. Here's the trigger. I'm going to try to catch up here, guys. I'm very distracted with this stuff at the moment. So right here suggests lower. So because it's a sweep, for example, there's a sweep here. There's my counter rotation. That's a potential short. Why don't I take it? Because this is where I want to get long. You're going, why don't you get short? Well, I don't know. I think I want to get long. Why would I get long? Because I have a high probability of getting here. Did I get here yet? No, I didn't. So that's why I'm getting long. Just me. YouTube is good? Okay, thanks, RR. Appreciate it. Wish I knew where the YouTube link was because I can't find it, so I can't look at questions. Guys, if you're in YouTube, I totally appreciate it, and I apologize. I can't see your questions. Use the link down in the bottom of YouTube if you want to get to the Bookmap Discord Trader Lab community. There's no cost. You just have to confirm your username and address, and then find your way to Trader Lab. This is the long. Now, the first job, at least for me, since I'm going here, I have options. I can just scale so I can keep my stop below here. In other words, get risk neutral, minimum 2 lot configuration that we use in Trader Lab. You have to, of course, vet everything for yourself. And then I'm going for this. Or, here's the or. Not saying it's right, wrong. It's all metrics driven. Scale ahead of this. And then hold for yesterday's high. High probability we take out either yesterday's high or low. Okay? So I'm on the long side. Other traders in the Trader Lab are on the short side. And there's no right or wrong. How about that? We have lively conversations about context in the Traders Lab. It's a very complex question. What is the, quote, right way or right position to be in at any time? The answer is not as simple as you think. What it is what's your plan and where's your edge? All answers can be created in metrics. Otherwise, it's maybe. In fact, it's even maybe when you have an edge, because the casinos, when they play their games, they only play games that have an edge. Let's compare that to setups or structured trades that we do in Trader Lab. And then let's also accept, just like the casinos, they don't know the outcome of any hand. Neither do we. So if we understand the gaming business, we're not going to be trying to be right. We're going to be trying to only execute where we have a statistical edge. Isn't that what the casinos do? So what are you doing? Are you trying to be right? Are you trying to predict? Are you loading those indicators and time frames on to create certainty? Welcome to retail trading if you are, because that's what just about every retail trader does. And then the next question I'm going to ask you is, what is the outcome for most retail traders? That is the answer, in my opinion, to the question. So this is a long. Targeting is up here and then out the top. That's my first trade. Not saying it's a good one. It's just the one I took. And then so here, and then I'm looking for out the top. So what I do when we came back here, this was also a potential long entry, but then the range is only up to here. So I had 2 trades here, and they were based on location, real estate. And then this is called VPOC migration. This is also a structured trade in setup, if you want to use the term. I don't think of it that way. Along. And then this is the next structure. this, and then out the top. So let's watch. So if you got long here, your scale could be there. If you got long here, your scale could be there. This is Trader Lab. Let's see. Thanks, RR. I appreciate that. Pull back here. Trade is still percolating. So what do we have here? Long off this level. Long off this level. This becomes something called the variable high volume node. It is support. Pull back here. This is still chugging along. Target was here. Pull back, looking for it to continue. As of this moment, you know, I'm smiling, thinking, yeah, sun is shining. It is, until it isn't. Watch. Right here, trade's over. Okay? So for me, up here, and then that. Now, here's the other part of this. If this becomes too high, then you got to turn the barge around. Because what's happened then is the market is short. We squeezed out and got longs in on this leg, and there's no way to know. And then I have my level. If this becomes too high, remember the last auction, this was the retail price. And now the participants go, I'm not paying that. What are you kidding? And they leave the store. And I don't know that until this retail price, which is too low here, and now this is too high, and I don't know, too low, too high, don't know. As far as I know, going up. Break here, support. Where's my resistance? It's right there. But I don't know that naturally because I only have the benefit of hindsight. So right here, I'm all good. And then I get the shift. What am I anticipating? Let's look over here. Now I'm in microstructure because I want to understand auction. This is called auction market theory. And what is auction market theory? You know, the word theory, you know, right away you're thinking test tubes, you know, Igor in the corner. Well, basically, auction market theory is a pricing process. And it's the idea of the auction is what's too high, what's too low, what's retail. So if this price is too low, this is the new retail price. Just think shopping. And then the market comes up to this retail price from the ETH, high volume, retail price. I'm not paying that. Oh, yeah, but this is too low. Well, I'm still not going to pay that. This is the story or the discussion going on between the participants. Yeah. And all we're trying to do is get an alignment. So as far as I know, this is too low because it was too low over there. So what happens over here? It moves up, more volume. This is too low. And Tom is going, yeah, we're looking good, Lewis. Feels good. Watch. So right here, everything's wonderful, you know. Get the mint julep out, maybe a pina colada since I'm down in Costa Rica. And this is support. Now, right here is what you might say, a key moment. Here's why. If this is the new retail price and this is too low, might we say that might be support? Might we say this might be support? Got to label these things. I'm getting lazy. You know, the internet goes down, it kind of scrambles my brain. You should try trading when the internet goes down. So too low, too low, to break, support. Is that too high, you ask? Is that too high, you ask? Watch. Uh-oh. There's trouble in River City. Now, I get taken out, okay? Now, I know this was where my microstructure was, and I know that 60 is a key number. I break below here. Let's watch now. Where do I come back? Now, I'm going to show you something. What this suggests to me, because now I'm below this level, there's my microstructure. Now, this is advanced in some ways, but this is what we do in Trader Lab. And the idea of Trader Lab is not that you take these trades. It's that you understand why. And then piece by piece, bit by bit, you assemble a plan. This is microstructure. And what it is, for example, I can't do anything here because 60, remember, was my level. And if I get below 60, I got to turn the barge around. So right here, I'm at my level, chop, chop, and I know I can either hold this and come back up or break. Once I break, this right here is too high. I'm going to draw another little thing for you to see. And these are what's called structured trades. And I'm keeping this as simple as possible. But if you haven't seen this before, it's going to be fine. What happened here? Passive sellers are here. Passive buyers are here. Location, location, location. Think real estate, you know. I break. All right, I'm under my 60, but how do I get into this thing? It's leaving without me. I want to get short now. Let's see where we might do this. Where might we do this? Where might we do this? There. Let me show you. Now, I can't see, remember, if you're in YouTube, I can't see any questions, so I appreciate you being there. Come to the Bookmap Discord Trader Lab community if you have any questions, or actually, if you want to be part of something I think that's rather unique. The Trader Lab is a group of like-minded traders who come together, all types of experience, to leverage their collective experience so we have something better. There's not a right way to trade per se, or one way to trade, I should say, but we know it doesn't work. So you might want to start with finding out what doesn't work for most traders, and then go from there. Because most traders don't understand what the business is, and they kind of. And I did a webinar called Trader Groundhog Day. So what do we have here? Consolidation. Inside a consolidation is volume. If in a higher time frame, as you guys think of it, I don't, but a fractal. If this is the retail price, the highest volume, and this is our support, I test it, I break back, and this is too high, and I leave it. It's over for the longs. Now I come here. What is happening here? Same thing, but it's in a shorter time frame. I break away from it. I'm not paying that, they say. Well, they come back to the store. Where's the resistance? It's this outside edge where the buyers got thrown under the bus. There's buyers here, passive buyers. Sellers took control. Well, if I come back to it, just like coming back to this price, it was too high. Is it logical that this might be too high? So now I'm looking for a way in. I'm leaning against this. I'm leaning against this. And let me come down now to the next microstructure. Watch. So I have too high, chop, 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 break low, suspect, break, trigger, stop here, short. And where am I going, you're going to ask? I'll show you where we're going. Here. This is the next target. This is all structured. And let me show you the target, then I'm going to show you why. This is material also, but we'll talk about that. This says continuation potentially lower. I don't know if I have time to go into all this today, but I'll try. This is the target. So for me, the short, I didn't get in up there with the other Trader Lab participants so near the high. If they did, I was long and then I was short. That's all I got to do. Now there's other trades. This tells me there's going to be a reaction. This is a sweep. I have icebergs. I have 333 sell stops coming out. Thanks for playing. This is when your broker sends you a gift basket, and this was the target coming down. Why? Why? Let me tell you why. If the ETH, volume point of control, highest retail price is too high, and we reject it, where's the last price that was too low? This is from Tuesday's RTH. This price was too low. So what we found was too high. This is all the auction. Too low. Now, right here, no clue, naturally. So that's my target. That's it. And I see this. This suggests to me counter rotation. Is everybody tracking so far? How we doing in Discord? I don't even know if I'm live anymore. Okay, thanks, Debbie. And are we still cooking in YouTube? Can someone just post something in YouTube so I know what's going on over there? I thought I saw a post, but it could have been earlier. I think it is the other one. Let me just see. Live. All right, hold on a second. Let's see. Check. Let me just move this thing around, see if I see myself for a moment. I think I am. There's a little delay in YouTube. So guys in YouTube, be patient a second. I'm trying to see if I'm actually, oh yeah, I am. Wow. Okay, sorry guys about all this. All right. Thanks everybody. Yeah, I'm now able to see the chat in YouTube. No wonders overseas. So this is a variable high volume node, too high. This is our current retail price. This sweep suggests lower. This sweep suggests higher. You can learn this in the Trader Lab. Let's look. You see? So location, real estate. We check settlement. We get here, and that sets up with this. For me, this was my target. I just get out here. I don't know where it's going. Do you? Nope. So what I had is a long, got paid on some of it. I take a short from there to there, no problem. And then it's what? Good question. Now what? So now I have two possibilities. This is the low of the day, and I'm going to retrace, or I'm now going to squeeze out the shorts in this leg. So now I have to be attentive. So I come back up. Now I'm starting to look for location to get short for a continuation trade. So I'm thinking, well, I got this location. If it's too low, I can now squeeze everybody out. Where's my locations? Well, my location for my next trade is at mid and VWAP because my volume point of control is below me. But, and here's always the but, the catch, I tested this. So there's a couple possibilities, and that's all you have in trading. I can come here, return there, and come out the bottom, or I'm going to squeeze everybody out. So when I come up, and there's another reason too, I'm on an outside edge of this distribution. So I'm stalking a short here. So I'm looking at it, and I'm going, okay, do I have a trigger? So I'm looking right in here. Now I'm not mechanical. So I'm looking at it and I'm saying, well, I got absorption here. I'm at the VWAP. I've got the mid. I've got enough range. And I've got my outside edges up here, the low volume node. What the market tends to do is rotate up into these areas. So I don't step in front of the market where I know there's a lot of stops, mid and VWAP. I do have a structured trade that would come back here, but it has to fit my range, which it will not unless I can get further outside. So I don't have a trade here. I'm just looking at it, looking for a trigger. And I don't have one. But I am looking. So I'm looking here, right here. But by the time I enter, I don't have a qualifying trade because of range. And I know in Trader Lab, some traders took this trade. Didn't qualify for me, and I had no trigger. This might be a trigger, but the mid is here. I cannot step in front of these because that's what retail traders do. I have a saving coin called Think Like a Retail Trader. Don't act like one. So let's look. So here, I'm looking for the short out here. Okay, my outside edge. And what the idea of this is called mean reversion, it would come back here. That's the basis of the trade, and then potentially out the bottom. Like I say, potentially. And so I'm looking. I come up here. Now I get my buy sweep. This suggests to me the potential for a short up in this location. Let's look at it. Where am I? 60. You remember the number, right? What else do I have? I'm out here. Now, I'm looking at this and I'm going, okay, I got my mid, I got my VWAP, and I got my sweep. So right here, I'm looking at this location for potential short. Now I'm looking out here to come back here. Let's see what it does. I come down here. I'm thinking right here, I'm thinking I have a short. I got my liquidity. I got my sweep, and I'm looking for the counter rotation to come here. So I'm thinking I have a short right here. So I get my break. That's a trigger. And then I come up here. I come up here, and I'm looking against this right here. However, let me give you the however. What do I have here? The current high of the day. What about all the shorts that are in here? I'm looking at it and I'm thinking, well, I'm coming back here. This is not so good. So now I'm thinking statistically, I have a high probability of taking out the high of the day and coming back up here. 80. This is a key level, remember? So nada, and I want to wait for the high to get taken out. I didn't get the long trade coming back. I just took the short trade going down. You know, that was okay for me. Now I'm looking forward to take this. So in the Trader Lab, you could adjust. Well, you could have just taken the short. You could have taken the long early like I did and taken the short like I did. Or you could have gotten the long and come all the way across the range if that's your trade. And then you're looking to take out the high, yesterday's high. Okay? So those are all structured trades. I don't take all of them because if I don't get good location, I'm kind of indifferent about it. No FOMO. So right here, we come up. Here's my VPOC migration. This says everything below is too high. Going to the moon, Alice, right here. Now, watch. So right here, I'm looking at it, and I have my consolidation. What is this? Support. Remember, I'm following process. What is this? A high volume node. What is it going to do? Great question. Continue, but I got a high probability statistic, and I took the early shorts out. Now what? Good question. Now what? Break, come back here. Where's the support? It's there. Where do we come? There. Notice the levels, how the market reacts. But, so here, I'm looking at this, and I don't have a way into it here. It gets away from me. I don't chase it. I have to wait for a rotation. This is my support. I'm now looking outside because now, if I got yesterday's high, then the possibility is to come back here and take out the longs. I'm in two-sided trade. That's all I know about it. I don't know what it's going to do. And now remember, this is not a business of prediction. It's a business of alignment. So let's see what it does. VPOC migration, too high. So now this is my area of resistance to test. I'm now looking for the short, and I'm back under 60. What happened over here? 60. Let's just see what happens. 60. Let's just watch. 60. Short to there. And then we're looking for it to fall out the bottom. And we have another stat, by the way. It is the, we have yesterday's low, possible, and we have the ETH low. So these are also now open. This is my support. This is my resistance. This is a short to there, and then we're looking to fall out the bottom. Let's see what it does. Follow it? So how many trades are here? Not that many. How many do you want? I don't know about what you want, but how about what do you need? And where are the opportunities to get paid? In the rotations, not in the chop. If you're looking at this and you're going for that, I don't know about you, but I find waiting, and there's more here. Let me show you this also, the trigger here. There's a little bit more. The market's coming up. You notice these lines, weren't they put in earlier? You do notice that 59.60 was an important level. There, and when I break below it and I test it, I took out yesterday's high. I checked this price, which was 80, key location, right? And then what was below, that was important, 60. So 80, 60. This is the same structure as yesterday, or day before yesterday. Trade was to there, and all we did was go up and take these guys, the shorts out. Thanks for playing. Once the shorts are out, then we can turn around and get short and get the longs out from this morning. Isn't it logical? And so what we did is we went up, we came down to there, then we went back up. I think we took the high out. I can't. Oh, that's right. So up, didn't take the high out, got the overnight VPOC, down to this target, up, took this out, and now down back here, and the rest remains to be seen. Is that logical, guys? This is trading. Now, maddening? Well, can be. But what is your job if you call yourself a trader? Isn't it alignment? So here's the alignment. Right here says reversal potential based on the sweep and what we see in the order flow. Right here is the obstacle and the mean reversion. Right here's the retracement to the location. And right here is another short to come back here and fall out the bottom. That is it. Now, this right here is suggesting counter rotation. Let's see what it does. Order flow. So if you took a short here, you'd be done. I mean, does it matter to you? I don't know. Doesn't matter to me. I just take what the market offers. I'm thankful, and I take stops also. I can't say I'm thankful for those, but I accept it's part of the business. It's called cost of production and overhead. Let's look. Now remember, what's important here? This level. What do I see here? I see my sweep. What did I see here? My sweep. What does my sweep tell me? Potential for counter rotation. What else do I know at the time? This is an outside edge of a higher time frame, which I have no clue, by the way. I'm below this, and I know that if I stay below this, I can keep going. If I don't stay below this, then I can come all the way back up here to an outside edge. And I know what else? 60. Let's see what it does. So here, reversal, out. Thanks for playing, Tom. We're going to send you a gift basket. Has your broker ever sent you a gift basket? Well, they should. Now, VWAP mid location, outside edge. Let's see what it does. And this is when the stream started and all the nonsense happened, so I haven't seen this. This is suggesting a potential counter rotation. Let's see if we get it. I'm seeing it here, and now I'm at the mid and the VWAP. Let's see what we get. I have liquidity, location, think real estate. 60 is a primary element. I am on an outside edge. My volume point of control or retail price is below me. This is a specific condition. This condition is called mean reversion. It is rotational. Outside, going to zero, right? Who knows? And then once we come across micro high volume, I'm coming here. And if I get through here, then I'm coming outside. Who knows? Remember, I can't predict anything. If you can, come to Trader Lab. We're all very interested. Now, this is suggesting to me rotation back to here. Let's see what happens. And I have not seen this, so, it is. There's my data hole. How nice. So I don't know what's here. I'd be looking for a short here, but I cannot tell you, so let's just skip that. What does it do? See the structure? Oh, there we are. This is a short. And because of this, I could not tell you it was a short, except right here, I was anticipating the short. Is this making some sense? How are we doing in YouTube? Guys, if you are in YouTube, please give a like. Apologies for the problems from Costa Rica with the string in a tin can for an internet. And I'm still getting data lag, I'm sure. You should try trading with this. If you think trading gives you a little indigestion, you should try trading when your internet goes down. That's what bracket orders are for, by the way. Now, if we fall out the bottom, which we can have an acceleration down. Let me show you again why. This is very cool. Not if you're long, not so much. So, resistance, support, break low, shorts only for me, not a recommendation. And what's under here? How about the Grand Canyon? Because this is a consolidation. Let me just show you the higher time frame. In the Trader Lab, you got to learn to integrate multiple time frames as you think of them. I don't think of time. I don't operate with time. But in this time frame, since it's daily, only RTH, it is. This is called the naked volume point of control down here, 5871-ish. Out here, if we come under here, there's nothing except the gap here. And the low volume outside edge is here, 93.5. These are higher time frame distributions. Too high, too low. Retail. If this 60 is too high, and I'm below the current retail price in the developing RTH, and I'm below the previous retail price, and I'm going south of the border, all the longs in here, this distribution as it's called, have their stops here. What do you think will happen if we get under here? All the breakout traders, all the longs, it's going to potentially accelerate. And that puts this and this on the hip parade. So the next target down, and this is not a recommendation, is the break of this low, 93-ish, and then maybe 71. So for me, shorts only. Is that making some sense? This is Trader Lab. You can learn this. Doesn't mean you're not going to take stop. Let's just forget about that. The casinos pay the gamblers. Every business has overhead and cost of production. This retail price comes from this day. That is, and then we had our gap. Okay, this is too low. I think this was the election day candle. I did a webinar on this, that this was projecting a certain outcome for the election, and this is, I think, the day before. I don't remember anymore, but there's webinars on that. And then we had our Jubilee rally, which held this support. You'll notice. Off we went. And now, where are we? Let's look at this a little bit. This is auction market theory. This is how the market tends to work. We came up here. Happy days are here again. This becomes too high. We break down. Right there, we test. This is the auction. Here, there, too high. This is the Fed day. Thank you, Chairman Powell. This is the Acapulco cliff dive. The market is short. The market is short. Squeeze out the shorts. Market gets long. Squeeze out the shorts. Now we got the longs. Now we throw the longs under the bus. See? Now the market's short. What's next in the hip parade? Come out here, maybe. Not a recommendation. Get the shorts, and then what? Squeeze the shorts. You see how it works? That's how the market works. Now, that's random. That's part of the euphoria that we get in our pit in our stomach because we're fearful, which is normal. But if you have a trade plan and the ability to understand how the market works, not predict, because we can't do that, but anticipate and then get in alignment with what's called structured trades, you might be able to actually do this. And it doesn't mean you don't take stops, because you do. And it doesn't mean anything other than the potential. So we have right here a couple of things going on. Yeah, and if I drop out, remember, I will try to resurface as soon as the internet comes back in. Part of the problem of being in Costa Rica. Kind of nice to be in a warm spot, but I will tell you, when you're trading, and but I trade with OCOs, so that means the worst that's going to happen to me is either I hit my target or I get stopped out if I lose internet connection. And of course, I prefer the target because they're OCOs. The other contract is canceled. Kind of a nice thing. We didn't used to have that in the old days. So coming down here, sweep, looking for a rotation, nada. Let's watch. Buy, looking for down. Looking for down. Let's watch. Just south of the border. So all this is shorts. Now, here we have something called the IB continuation trade. I'm going to share this one with you. This is structured trade out here. When you come back down and you come up, if you're not short, you can take this if it's part of your plan and vet it. Why? We're under the naked volume point of control. We took and we failed at the high. We're coming back across the range, and now we know we have longs in the market. And if we can get under this and this, you want to be short. And this could be one of those trades. You know, these are the kinds of trades, if they're vetted and you actually are patient and wait for them, they make your month. I mean, isn't this why we're trading? We're not trading to play a video game. At least I'm not. I'm trading for the rotations, the large rotations. And I trade for the large rotations because my risk is pretty consistent, 3 points or less. So if I'm going to risk 3 points, I'm going to risk 3 points to make 3 points? No, I'm going to risk 3 points to make this and more. That's just me. But I find that if I trade less, it actually can potentially give me more. Less stops, but the range makes up for the stops that I inevitably take. Are you guys tracking? How are we doing in YouTube? Anybody conscious there? Please give a like. Apologies again for the problems with Costa Rican internet. Last night the power was going on and off. There was no reason. Just like, yeah, let's just flip the power off. Okay. So this says lower. This says counter rotation potentially developing. This is the outside edge. So there is no counter rotation. This is our acceleration. Look where we are. And this might suggest where we are potentially going. This is the outside edge of all this energy. The stops, the guys who are position traders and now breakout traders are activated here. Next target is 71, not a trade recommendation. So the last short, depending where you got in, which, as you know, was up for me, up here, was out here. And all you're doing is hanging out and managing your trade. Is this something that could help you? And where's our potential target? Now it's trade management. This is suggesting counter rotation. would be monitoring this very closely, but I'm also looking for acceleration because it's a breakout. And this is my next target. All these are on the chart, right? And where'd it come from? You're asking. I know you're asking. I can hear. It came from this day because it was too low. Shopping. Too low. Bang. Up we go. See you later. Then this becomes too high. Then we auction this large distribution after Fed Day. And what do we find out? It's too high. It's too high. It's too high. It's too high. We get under there. And now what? We're under here. That's our next target. If you're in Trader Lab, you'd be either managing your trade or you'd be trailing a stop. You'd be out. It's one or the other. And I can't tell you what's right for you. Are you guys getting something from this? How are we doing in Discord, in the Bookmap Discord Trader Lab community? And how about in YouTube? Are you guys getting something from this in YouTube? Is this interesting to you? Use the link in the bottom of YouTube. Visit the Trader Lab. That's all I can say. There's no cost, and this is about the business of trading. If you're interested in the business, it's not a video game. It's a strategic endeavor with using structured trades that have a vetted statistical edge. You can learn this, and it's not doing what I do. There's other traders in Trader Lab, I'm sure, who do it much better. So it's what you do. And the thing about it is, you can design anything you want once you understand how the market works. But I'm going to suggest to you that what happened to me with indicators, I started trading in 1980. Technical analysis was pretty much in its infancy, other than measured moves and classical bar charting. That was it, you know. So I started out when technical analysis was looked down upon. It was voodoo. Everybody used fundamentals back then. What's this technical stuff? That's for, that's ridiculous. So it was a rather dismal experience at first because it really made you question if you could, what you were doing. And the other part is with technical analysis, by the way, this is a sweep. This says counter rotation. Maybe. And I say it says that. Really, the right word I should say is it suggests it. So this is the target, though. Doesn't have to ever get there. Just remember, this is trading. So for me, this trade, I have choices here. I know this is a major event in trading. And I know if I'm below this area, I can at least potentially, I'm always going to say potentially, go there. I also know, remember, this is the next target, auction-based. Let me see what else I know. I haven't looked down here in a while, so I got to look. I know this is possible, 58.30, and then down here around 19, 18 and change. But this is the primary target right now. And market never has to get there. Remember, I'm breaking out of an higher time frame consolidation. Energy is being released. Remember, all the longs in here are now under the tractor. So here, last area that was too low. Are you guys tracking? Does this make sense? This is how you can get an alignment. Doesn't mean we don't predict. Okay. So let's see. Please give a thumb up in YouTube if you're interested in the Bookmap Discord Trader Lab community. Use the link down there. There's 60 PDFs of structured trades, exactly what you're seeing here, that are available to all of you at no cost in the Trader Lab. This is like from 2020. And I'm not a vendor. There's no cost for this. And a lot of traders are asking me, what are you doing? And so I threw some of these together. Just said, here, have these. And a lot of what you're going to see here in the stream, and these are what I call primary structured trades. They're really part of education. This is not advanced. I go into advanced in the Trader Lab, but you don't need advanced. You need primary to get to advanced. Now, for some traders, this is already advanced, but you need to be able to walk before you run. Speaking of walking or running, there's the last day today of the annual 30% off for the Global Plus Bookmap subscription. If you're ever going to try Bookmap, saving 30%, what do we got to talk about there? I'm just going to say, think about it. Better yet, if you want order flow in your life as a retail trader, this would be a great time to stick your toe in the water. Just saying. So what do we have here? This is our target. Now, what do you do with this? How do you deal with this? Do you stay short and ride out rotations? What do you do? How do you manage your trade? Well, let's look. That's too high. Break. There's micro high volume structure. Let me draw a little line for you. This is how I narrate the market. Now, it doesn't mean it's good. It's just a way. This is too high. Too high. Where's our resistance? Well, it's up here right now. What is this right here? Little micro high volume structure. Let's just see what it looks like. So, too high, break. Here, chop, chop, break low, too high. This is your resistance, and this is resistance. So, and what do I have down here? This says, let me find it, potential counter rotation. Let's just watch the structures. Now, anytime, subject to your plan, you could be out of the short, and it doesn't matter, right? Would that be an okay trade for you? You know, does that put a hamburger on the table, or maybe for some pizza? I kind of lean for the pizza, but that's just me. Where was our last short? I can't even remember. I think it was over here or up here. Are you okay with that? This is the Trader Lab. You know, it says 50 points. I'm not saying you would get 50 points unless you have a plan for it. Would you like to have a plan for it? And why do we get 50 points some days and some days we get zip or 5 points? Because that's what the market offers. If the market offers us opportunity, we need to be able to capitalize on it, wouldn't you say? So this is the target. So if I know this is my target and I get a counter rotation, what might I be doing? Well, number one, I'm always going to manage my trade. And if I get taken out, I'm just going to say that's okay because it's all random and I have no control. The only control I have is what I do, not what the market does. And how do I know what I'm going to do? That's a trade plan. All that's figured out before we're here. And that's the job. Where's my resistance? Isn't it there? What is this? Isn't this something that we might think about as a continuation trade, more advanced? Not saying it is, not saying you should. I'm saying it could be. And why do we know that? Because this is too high. We have our sellers. We come back to the micro, right here, the micro structure. I break, I test, I break. What is that saying? Potentially too high. Where would my stop have been? Up here. What would happen down here? I would be risk neutral. My stop would be here, and then I'm going for there. If it comes back above here, and these are not trade recommendations, I would scratch my trade, and my broker sends me a number. Well, maybe a dozen roses because I already got the gift basket. I'm going for here. Can you see how this might work for you? This is trading the auction in fractals. All of these are continuation shorts. I have to ask you, just curious, any reason to get long? Not saying you can't. I'm just asking. Joe is commenting about microcomposites. Here's the thing about a microcomposite, and I believe this is the right answer for me. What is a microcomposite? You're trying to, this is called a microcomposite. And what it is, it's a composite of days, and you're trying to get swing high, swing lows, so you can see the distribution of the volume. A swing high is an event, as is a swing low. So right here is a composite. Swing low, swing high. When you break out of it, it's change in the perception of value. Now we have a break. This now is begins the development of a new microcomposite. The high is here, where we rejected this high volume in the microcomposite. Where was the low? It's there. High, low, and then we're inside it. This is a consolidation in a higher time frame. This is the microcomposite. This is the breakout. Inside are rotations, RTH candles. This is the micro composite. This is the breakout. This is the structure. That's the target. Again, just mine. But if you look at the auction, can you see why? Let's come back. In the intermediate time frame, 60, 80, 60, 80, today, 80, too high, below 60, hasta la vista, under this low, see you later, thanks for playing, under this low, weeping and gnashing of teeth for the longs. Why was this important? And why is this the area that we are trading? You don't know the answer? Then you have some work to do. Because you might be trading the wrong information. So you have to study and understand how the market works and auction mechanics. Everybody. The auction is the behavior of the participants. It's not set by any specific number of days. Weeks mean nothing. It is the rotational aspect, and the participant behavior defines everything in trading. You try to put something fixed over it, you're missing the point. That's not, the market doesn't look at the clock, and the market doesn't look at the calendar. It looks at perception of participant behavior. Does that make sense? Joe, thanks for contributing our discussion about microcomposites. Now, notice where our target was. Isn't that interesting to you? It's very interesting to me. It's interesting to me because I started trading the auction specifically in mid-1980s. In it with other stuff, which really messed it up. But my understanding at that time, I had pieces of it, but I didn't understand. It was never defined before until Peter Stottlemyre came along with market profile. So I had pieces, but it was very much not a complete picture. And don't forget, it's all random anyway. By the way, here's our sweep, and that's where our potential reversal comes. It's over here. Now, I don't know that. Why wouldn't it go there? Wouldn't you like to know? I'd like to know. Does it matter? No. You'd be out of your short and forget about it. Get in the Barca Lounger and have a mint julep. Look at this trade. So now Peter Stottlemyre created it. He taught me the market profile. So I learned from the guy who created it. And that doesn't mean anything other than I was there at the beginning, just like I was with technical analysis as it developed after classical bar charting, which was really the only, measured moves, pennants, head and shoulders, all that kind of stuff. That's what I learned originally at the CME. Then as technical analysis came in with indicators, Wells Wilder, I did deep dive into that. And then eventually built trading systems because I was, as you guys know, CTA, CPO, money fund manager, all that jazz. Had my own firm. But what's important about that is that I went down this path of trying to fix defective processes. I spent years trying to get things to work, and what the catch-22 was, everything works. So defective processes, just like gamblers win, So what they do works too for them, except over time, they give their dollars to the house, not necessarily on the next hand or the next 5 hands, but over the random distribution of outcomes. I didn't understand gaming, so I kept looking for being right and confirmation. Isn't that what we all do? And I didn't understand that we are wired to avoid risk. So the way we avoid risk is by becoming certain. Well, if you spend all your energy looking for certainty, maybe you're looking in the wrong place. This is why I agreed to do Trader Lab, because most retail traders will run out of time and assets before they ever understand the business they're trying to be in. Because those 200 indicators that are packed in your software package are going to send you down the yellow brick road. and maybe into a wall, maybe not. So there's a link in the bottom of YouTube. If you're interested in understanding this, doesn't mean you'll be a successful trader. There's a lot of work involved to kind of change what you believe and to overcome the psychological impediments. We all want to believe we're doing the right thing, and because we have winning trades, we think it's just making it better. I wish I could get the years back that I spent with that belief because of the winning trades. If you had no indicators and you just blindly pushed a button and you didn't know if it would say buy or sell, it was just a button and it was random, you'd have winning trades. So doesn't that tell you something? I want to make the point because we tend to lose the point. And I want you all to have the point. Yeah, Joe, the conversation in microcomposites is for you and everyone else who hasn't asked. So you're my hero today, Joe. Because when you participate in TraderLab and you get verbal and you're not afraid of looking good, because none of us do, we don't. You got to get over your ego. Ego is as much a problem as needing to be right. And when you need to be right, you're going to be fearful. Everything about yourself, and I'm not referring to Joe, I'm saying us collectively, is a reflection of your inner self. The psychology is overwhelming, and we don't even understand ourselves and our primal wiring. I believe if you come to TraderLab, and it's just a personal belief, and it may not be appropriate for you, and it has nothing to do with you, it has to do with the business of trading. I believe if you come to TraderLab, you can learn how to trade. I believe that. Now, how do you do that? You got to do the work. You got to be willing to go through a learning curve that is not going to be pleasant. Why? Because to play in the major leagues, you got to step back and accept who you're competing against here. Traders who are better equipped than you because they've already paid their dues and gone through a learning curve. If you think this is easy and it's a matter of indicators and time frames, I'm going to suggest that might not be the right answer. I believe you can find the answers. And traders like Joe are the traders that have the best opportunity to succeed because they're posting, they're asking questions, and they're part of the discussion. If you want to become part of the discussion, use the link in the bottom of YouTube. If you're visiting, if you're in TraderLab, get involved, become part of the discussion. Do not sit in the back of the room. Raise your hand, ask the questions, challenge each other. That's how you learn. Narrate the market. Constantly review what you're doing. Constantly move the ball forward. Determine in 2025 not to do the things you did in 2024 that didn't help you move forward. What are you going to do different today, tomorrow, next week, this year? Are you going to do anything different or are you going to do the same? I suggest you embrace the opportunity while it exists. You make the most of the opportunity to build a business and a potential career path. You can do that in TraderLab. There's no cost, and I'm there for you as long as I can be. And nothing will go on forever, neither will the TraderLab. So as long as there's no cost, I would suggest now is the time to get involved. Have a great day, everybody. Sorry for the technical issues, and I look forward to seeing you tomorrow. Take care, guys, and thanks for visiting the TraderLab. See you soon. And don't forget, this is the last day to take advantage of the special sale that's going on for the annual subscription to Bookmap. Go to bookmap.com, deals. Take advantage of it if you ever wanted to take advantage of a high tour order flow tool like Bookmap and all the education that comes with it. Thanks again, guys. See you soon.